Well, for more on the tax implications for U.S. expats and the new tax bill, let's chat to Kyle Pomerleau. He's the Chief Economist and Vice President of Economic Analysis at the Tax Foundation. Welcome to the show.
Hey, thanks for having me.
Now, it's already complicated enough for people in the U.S. to get their heads around all these new rules and tax law changes. What are the requirements for expats filing their U.S. tax returns?
Yeah, so this is actually something that really hasn't changed due to the Tax Cuts and Jobs Act, but Americans who are living overseas, they need to file a tax return to the United States every single year. They also have to comply with a law that was passed in 2010 that wasn't changed, part of the Tax Cuts and Jobs Act as well, called the Foreign Account Tax Compliance Act. And this requires Americans with a certain amount of assets to file an extra informational return with the IRS every year.
And speaking of assets, doesn't get much bigger than the royal family. And let's talk now about the Duchess of Sussex, Meghan Markle, given her new position and all the changes over the last year. How different or more complicated do you think it will be for her?
So it all depends on individual situations. Now, I'm assuming that she will have enough assets that requires her to file a return for FATCA. The individual return as well, she may have to file that. There is an exemption amount that for taxpayers of $106,000. It's possible, very possible she's above that threshold, meaning that not only does she have to file, she also has to pay tax. So it could be complicated depending on her situation.
And of course, we know that the royal baby is also coming soon. What do we know about how the royal baby will be affected by any of these changes, being that her father is British and her mother's American?
Yeah, so again, it's going to depend on their situation, but the baby, because the baby is a U.S. citizen, this means that when this child turns 18, they will eventually need to file U.S. tax returns as well. The U.S. for the entire history of the income tax has had what's called a citizen-based tax system, in which U.S. citizens, regardless of where they are and where their source of their income is, need to pay U.S. tax on that. So that ropes in these Americans that, or these citizens of the United States that may, in some cases, have never been in the United States.
Now, we know that Trump's tax changes did catch some Americans by surprise in terms of the number of refunds that they thought they were getting or having to shell out some of these larger payments now to the government. So what are some of the implications that you're seeing in terms of the changes, not just for expats, but for ordinary filers as well?
Yeah, if you're an ordinary filer in the United States, there are two things that have changed on you, and this has created a little bit of confusion for some people. One, your tax liability has changed, and because what they did in the Tax Cuts and Jobs Act changed not only tax rates, but also your taxable income, it's hard to tell for some people exactly how their liability has changed. Add on top of that the Treasury has also changed withholding tables to better match the new tax law. So individuals withholding on their paycheck every single year has changed. So what's happening to many people is that they are doing their taxes and they're realizing that their refund is smaller than it used to be. Now that may have nothing to do with their tax liability. Their liability may have gone down, but because their withholding have changed, their paycheck is larger every single period, caused a little bit of confusion. So some people may have thought they got a tax increase, but just they saw a smaller refund.
Now, there have been some issues about people reporting whether or not it's the middle class that have been pinched. Are there any demographics that have done better with these tax changes?
Yeah, so if you look across the population of the United States, about every single income group on average saw a tax cut. Now, that's going to differ based on situations, and also once you get to higher income levels, you also see larger tax cuts as well. So the tax system overall, what we'd say, is less progressive than it used to be, meaning that higher income individuals are paying less taxes than they used to as a share of total. They also are seeing lower effective tax rates. But in general, most taxpayers are seeing an increase in their after-tax incomes.
Now, for people who either started a business or were thinking about starting a business, how do these new tax laws either help or hurt them?
Yeah, so it's help in terms they're going to see a big reduction in tax liability. So the tax law enacted something called Section 199 Cap A, which is a new 20% deduction for business income. Now, that's good. That's going to lower tax liability. The downside, however, is that with any new tax provision, there are new rules, new forms to fill out. So there's additional complexity added on top of that for anyone that has a business or wants to start a small business.
Certainly lots to keep in mind. Thank you for breaking all that down for us. Kyle Pomerleau, though, Chief Economist and Vice President of Economic Analysis at the Tax Foundation. Thank you so much.
Thank you.